Hello, everyone. My name is Igor Tomych, and I'm CEO at DashDevs. And today at Fintech Garden Podcast, I'm really pleased to introduce Tony Fish. Hello, Tony. How are you?
Igor, I'm really well this morning. Thank you very much. How's yourself?
I'm really good. It's a Friday, and we're going to discuss a really important topic about AI and data governance. And before we do that, can you please a little bit expose your experience, what you have been doing and what you are busy with?
I'm lucky enough to have built up and sold a number of businesses. I've also run 3 venture firms, investing quite a lot of money into about 100 ventures over 35 odd years, sat on 44 boards. And most of my time now is trying to help other board members ask questions they didn't know they had to ask.
That's the best way to put it, because I think having an ability to ask a proper question, it's already more than half an answer. And I think that's what defines us as a humanity and differentiate from animals, is an ability to ask hypothetical or even practical questions and then find new ways how to answer or how to get the things. And today we're going to discuss the AI governments. Would like to explain for someone, explain it like 5 years old. What does it mean? Because everyone is buzzing a lot, but I don't think that everyone has a really good understanding what AI and data governance means.
Yeah, I don't think anybody's really got a clue what AI is. Part of the problem is we don't want to know what AI is, because at the extremes, it does look like some of the Hollywood movie type scenarios, which means that people get very scared. At the other end of it, people are engaging with a bunch of tools which seem to seemingly make their life easy, but actually they don't understand the implications of the tools they're using on their own abilities. And therefore we have a very odd environment where we've got far too many people creating far too much noise about things they don't understand and don't know. Now, that doesn't mean I understand and know either, but it means that I will sit back and ask questions which a lot of people don't want to ask because it's easier not to ask them.
I have my own as engineering overview, because I used to think about like engineering and the computer. It's a magical button, which is doing the things faster and easier for you. And as a humanity, once again, we were trying to do that for centuries. Even the button for switching on the light is kind of programming, because instead of wiring, you're automatically get everything lighted up in the room. And now you can see everything. And the same is happening with the code, because when we install an application, we're getting something faster. And I think the biggest difference, and correct me if I'm wrong, and I would like to discuss it with you, AI, before that, everyone tried to at least understand what they're building. If you're creating an application, you're thinking about the code, you're compiling, you're delivering. And it's basically a 2-step process. You are putting efforts into scripting the behavior of application, and then it kind of does what you want. And right now we're kind of missing this first step, because we're training AI on a lot of data and we cannot 100% sure say what exactly it's built with, because it takes 1 million pictures of the cat, take 1 million pictures of non-a-cat, and somehow the model can say, okay, that's a cat and that's not a cat. Usually we see the second step when we interact with, as a customers or as a users, but first one is not really visible how the things are produced. Is it changing, and is it requiring new ways how we're dealing with this first step for producing the things with AI?
I got a feeling, though, at most innovations, when we look back, we think we know what we were doing. From the light bulb to taking your light bulb, your switch analogy one stage further back, which is you needed the light bulb to switch on, but therefore you needed copper inside wires and how you produce. We didn't really understand the consequences. And I think this is the piece that we're living through, really an invention. And it is a bit like the invention of steam, which nobody really understood at the time. Nobody really understood the invention of electricity at the time. It was a bit of a black box. It kind of like worked, but we didn't know how it worked. We're only now getting down to understanding at quantum level why electricity actually does work, even though we've pretended we understood why it worked for an awful long time. So I think we've oversimplified the past to try and make us doubt what's happening now. But even, I think the similar thing that has happened is we didn't understand the consequences of what we invented. And we have no idea what the consequences are that we're inventing now. We're very happy, like the first people with electricity. Well, some people embraced it, some people didn't. And that's been the same with technologies throughout every single age. I think what we've got to be incredibly careful about is the consequences that we can see, but it's the unintended consequences that we don't want to see that we really should. This is where you start to hit the policy problems, where some people want to slow down to consider. And some people say, well, we've never done that before. Why should we do it today? And it's not that there's a right or wrong, but what we should do is allow space. And I think this is the danger that we are having at the moment, is we're not allowing people space to dwell, to think, to consider, because we want to rush towards something where we're not asking the questions we should be asking.
Rush decisions should not be made with the tools and approaches like that, because I think we're putting the frameworks for years ahead. It's something, as once again explained, as electricity, a change in the world, because we fairly can divide the humanity before electricity and after. We're dealing with the totally different approaches. Let's jump in maybe a little bit more into the financial services, because I know that you have the strong vision how it's different from other technologies. So can you please explain how you see AI is different in financial services?
Yeah, I think there's a couple of points which are worth talking about, which is the first one is the easiest one to understand, which is effectively banks operate like railways and tech companies operate like roads. And the reason is that a railway system is deterministic. It maps where you start, where you end up. You're allowed approved routes. It's signaled. When a visible problem happens, there's a derailment. And that basically is like a policy violation. A train crash is unlike a car crash. And they're very different things. And the way roads work are different to the way that railways work. Railways are completely deterministic. A road, it's a real-time decision. You can have hundreds and hundreds of different routes. There's a completely distributed accountability for every single driver. Tech companies are fundamentally very good at driving cars on roads, which is this real-time decision, alternative routes, and distributed accountability. Banks are 100% a railway-based system, which is incredibly mapped out and highly deterministic. Now, that means that they're fundamentally different frameworks, and they're probably completely incompatible. Yet, we have tech companies and banks effectively coming together, which is causing this uncertainty in where we go forward, particularly around the governance issues that happen. So that's the easiest one to understand as a difference between tech and banks. The second one is that money, that thing in your bank account which allows you to do something, is completely different as a foundation to what tech companies operate. Effectively, banks operate on money, and something I'd love to claim is trust, where tech companies operate on data and attention. We understand money and trust. Well, we're not really understanding trust, but we don't really understand money either, but let's pretend we do. But the implication is, when a tech company gives you the wrong advert, it kind of like it doesn't matter. But when your bank AI denies you a mortgage or misallocates your emergency funding, or an uninsured person dies, the consequences are kind of like irreversible and actually are incredibly damaging. So money and trust operate differently to the data and attention, which is this sort of second fundamental principle why banks and tech are very different. And it really is that the outcomes from money and trust can't often be unwound. Whereas, say, getting married is a decision you can reverse, but dying when you're uninsured is not. And it's this asymmetry in governance frameworks that tech companies and banks have to try and work out how they come together. So you've got this whole issue that banks operate as a railway and tech operates as roads. Money and trust are fundamentally different to data and attention. And I think the last thing, which I'll pick up before I go on for too long, is that actually we are now a world which has traveled. And because we're a world that has traveled, you end up with very many different people who come from different cultures, living in different parts of the world. Now, I'll just take a couple of examples. Say one is the Japanese form of au revoir, which is harmony. And therefore, when they come to either a banking system or an AI system, they expect the system to preserve a social consciousness and basically live in harmony. Where, say, a Chinese, guanxi, demands a decision that strengthens social bonds. Now, these are fundamentally different to, say, Western frameworks that will emphasize individual autonomy and procedural verification. So now you end up with an elderly Japanese customer in an American bank, but the customer wants harmony-preserving methodologies where the American bank wants to pursue an aggressive individual advantage for their customer, believing they're doing the right thing. These don't kind of like work together. And we haven't worked out either a financial or a tech governance structure which allows us to bring together both technical authentication and cultural trust simultaneously. So they're three massively big area differences. Then we could talk about difference in governance and reliable third-party infrastructures, but they're kind of like getting more and more nuanced. I'd say they're the fundamental things which are difference between banking and tech when we try to bring them together with AI.
It's really a nice overview. And I have so many questions that I don't know where to start. But I really like the different layers because I rarely hear the cultural differences. And I think that's what we're missing a lot because by default, we're assuming that people around us the same as us, which is not true. We have so much diversity in understanding, perceiving, as experience, as values, and it's all affects the digital product or how we're dealing with the financial services. And coming back to the tech and to the financial industry, I think another level that we can put, banks are always going through the reality check. Because if you are falsely or unintentionally showing something different in social network, that's not a big issue. But it's totally a big issue if you're showing wrong rate or if you trade in the wrong stocks or you're authorizing wrong balance. So basically, the banks and the financial services, they're living in constant reality check because you cannot make up the reality that customer feels safe. In the end of the day, everyone need to see the same things, which another level, because AI, in my opinion, is educating us to live in the world of post-truth. Like we're taking the answers as a granted. So maybe from this perspective, do you see any requirements or the needs that AI in financial services should be grounded to reality? Because an ability to hallucinate and produce wrong results, which might be in other industries, is still acceptable. It's not so acceptable in financial services.
I've written quite a lot on this. A reality is somebody created this wonderful word, or two wonderful words around the AI industry, which have generated an awful lot of reading lists for people to go into. The first one is hallucination, and the second one is slop. AI systems do not hallucinate. Humans hallucinate because it's a bunch of chemistry. AI systems are designed through the way the neural networks work with a bunch of weightings to produce the next best possible word in the sentence and context that they're given and they're driving towards. They have no idea if it's right or wrong. They're not lying. They're not lying. They are optimized for a particular outcome. And that's what they optimize for. Humans then amorphize and put on themselves their own particular problems to say, it looks like this. It's not. The AI system is not conscious in the same ways that, owl eyes on the back of moth wings. The moth didn't suddenly decide, I need a bunch of eyes on the back of my wings because it'll give me an extra millisecond. There was a natural progression through an evolutionary process which gave advantage at any particular time. What we're designing AI systems to do is do they have an advantage? Form of optimization, we end up with outcomes that we don't really like, and then we label it with a word, and then we go off on a rant about it. The issues of slop, totally agree with, which is people do not spend enough time to determine if the outcome that they're getting actually has any benefit at all. They're just posting it out as more content. And yes, it's a problem now that we end up with more content which is unvetted. However, if you go back to really when blogging started, people could have personal opinions. Nobody went through and vetted those personal opinions, yet we didn't call it slop. Yes, we went through the age of the amateur. Yes, we've been through various fact-checking scenarios, which we now need more than ever in politics. But reality is that slop has always existed, and humans have always managed to find a route through it. We carry on throwing these things up without really determining that actually we've already worked out ways to go through it. Therefore, I'm sure we're going to come around and talk about regulators in a second.
That's additional player because, as you rightly said, with the tech companies, they grab an attention and there is no regulations. Maybe certain business and, let's say, business ethics and cultural approaches, which is set in standards, even though sometimes it doesn't work for big companies like, social networks. They can do a lot of things without any consequences. But anyway, coming back to the regulators, what do you see the part of the regulations in AI and data governance? Because it might be an essential part, like with the stress testing with the banks. Because if the banks would have an ability to operate money as they want, we would have a lot of crises and a lot of consequences for people who are putting the money into banks. And I assume something similar might be for the data and AI here. What is your thought?
I think there's a couple of things that are worth mentioning. And well before the millennium bug in 2000, banks had already realized that no single human being understood the banking system, and that we'd lost most of the people who actually had a vague idea of how the systems were built. Then we jump onto this second issue, which is then we've got this, how to explain this AI model. And actually explaining an AI model, I'm not desperately worried about, in truth. Explaining 50 interacting models and call them AI agents, which are trained on a whole different varieties of different data and model sets, producing emergent behaviors when we start to game these AI agents, which neither the system understands and no individual now understands. Then we combine, 50 models interacting with AI agents built on top of a millennium bugged 2000 banking system, which nobody understood. And we couple it with the Basel regulation, which is 8,000 pages. And it now, to hit compliance, you've got to interact with 50 plus regulatory frameworks. I think we are completely past the point in regulatory terms where we can't even read the rules, yet alone audit the AI systems that are supposed to be interpreting them. So there's a sheer volume and scale issue, which we want to pretend it's about the AI system. And actually, it's not about the AI system. There is such a bigger scale problem that's going on. I think the next thing everyone's talked about was the MIT report, which I posted out about, which was complete rubbish, and so many others of this investment problem where people are doing something. There's a bunch of herd mentality where you've got to be seeing you're doing some AI stuff. I think the issue that we're facing is the regulators facing a exponential asymmetry, which is the speed at which AI capabilities are developing far outpaces the classic audit capabilities. There's something that we haven't woken up to, that people are investing in something which is going to outpace the developments of the people who can actually see what's actually happening. And we're just not working out how to do it. And part of that is that all of the vast majority of way people have come towards governance and compliance, which, I'd struggle with enormously, is that they assume it's a deterministic system. So if we have this way of doing a checkbox, we have this defined set of rails, we have a stipulated destination, a violation is going to be immediately obvious. And that's exactly what is the antithesis of AI agents in real-time decision-making markets, which aren't pre-programmed. And markets themselves will respond to the way the AI algorithms are actually interacting with other AI algorithms. So regulatory audit of static snapshots is so outdated as a model, and therefore the regulatory frameworks we have is so outdated, but we're so obsessed with the way compliance works because we've built such teams and dependence on it that we don't seem to want to move away from deterministic systems to non-deterministic systems, because actually they scare the pants out of us in reality.
Maybe we don't have a tool set for that, because I'm thinking about this a lot. And it's not the first time when we in software engineering and in products, we're facing this complexity shift. We all remember the moment when we had abstraction languages as C, C++, because no one could understand how many code and what actually the registry movement and execution of the specific interactions is doing in computer. Maybe we're facing the same. We need new languages and new tools to express the level of abstraction that we have.
Am I allowed to do this on camera? So this is where it gets really fun. So here's my 8-bit digital ruler, which actually is my coding, and on the back of it, which will be near impossible to see, we could go back below C, you can't even see that. I've actually got the binary code, so you still can program at that level. But yes, you're spot on about the abstraction layers.
Is it maybe requiring, instead of going with the deterministic rules, to actually understand how we can package? Because in engineering there is a words coupling and decoupling, like how we can couple the really complex expectations from the compliance and from the data governments on another level of abstraction, which is easy to define. And then it's more space and frame to follow, because it's not saying you need to put the checkbox on the customer for accepting terms and conditions.
There you have a really interesting bit about this idea of compliance. Is compliance that you've agreed that this is the way it's going? But the reality is compliance, acceptance or consent actually is untrue, because if you don't accept it, you can't use the service. Yep. And if you want to use the service, you don't have this choice. So this whole idea that compliance means that you've got a list of people who have agreed, actually they only agreed because they want to use the service. They didn't actually agree to anything. They had no choice but to agree. So yeah, we have definitely got a problem. There is a recursive problem, because the regulators them now actually need an AI to audit the AI of what the banks are doing. That as a system makes absolutely no sense whatsoever, because the data sets that the companies are going to be using are fundamentally different built ontologies. So the regulator's AI will never be able to understand and audit the AI of other banks, because unless you understand the ontologies, you are always going to get this massive gap, and basically you create more quantum risk, which is something else I carry on writing about. So this is what I keep talking about, is we've got to step back and find new governance frameworks, which are not the tech way of doing it, which is the road system. And it isn't the banking system, which is the railway system. We've actually got to go away from these open and closed systems to what I carry on terming bridged and bonded, where you take the best parts of both and start combining them. But again, if you've only ever trained directors and regulators on open or closed railways or roads, suddenly introducing a new set of ways of doing something, you've got nobody who's done it. And guess what nobody wants to do? They don't want to do something that nobody's ever done before, because we're risk-averse people, particularly in the banking sector, because of the way we've built it. This is not going to solve itself quickly, I think, is the answer to all of that.
That puts a lot of thoughts. I would pause in this moment for the podcast and think a lot what we're trying to build and what we have on the table, because it seems that the equation that we need to build is almost impossible to solve in the particular case or in particular context.
On the other side, that's what excites me. You know, that's the thing that gets you out of bed in the morning. That's the thing that says, these are the things we should be doing. This is the place that actually is the most exciting place to be working at the moment because of all of this. It's not that we should stop and give up. It's actually, this is brilliant. This is opportunity time.
That's the way I'm always seeing on the issues. It's like the new way to enhance the process and understand something new. So yes, I'm with you that it actually gives a lot of excitement for finding the way how to solve, because fairly the number of resources and tools that we have right now is significantly more than ever existed before. We have so many languages. We have so many people in different industries who achieved a lot, because we have social networks. We have a lot of automation, hardware, financial services, health data. So a lot of different areas, they have kind of similar problems, and maybe there is already a best way how to tackle this particular problem. Another thing that I've seen in notes that we discussed and you said before is the explainability. So what do you think about, like, if we're not looking on the particular as an industry end-to-end flow, but itself on the business model? Because you mentioned ontology, that every bank will build own model and government model will not be able to talk. But in the same way, a lot of people expecting that the model is something that is really easy to understand how it works, because you're interacting, you're asking questions, and then it answers. What is your view here?
I'm not going to put a downer on explainability, okay? It's important, and it is really important, but in a way it misses the point. That's why I want to say that I'm not saying that explainability isn't important. It is, but if you only focus on explainability, then you don't see, you could either say wider if you want to sound really, I'm above it all, or deeper if you want to get down into the weeds where other people will take it away. I don't quite know how to say it that says actually it's just something that we should look at. And it is the system about, or it is the question that comes about illegibility or legibility. Do we actually understand what it's doing, as opposed to explainability? They are basically the same side. They are different sides of the same coin. So explaining one's model decision is not the same as making entire systems' behavior comprehensible. I'll say that again because it's a bit of a mouthful. So explaining the model's decision, explainability, is not the same as making an entire system's behavior comprehensible. Do we understand the why? Now, this is a bit like the difference between intelligence and consciousness. In a way, we don't understand the explainability of the AI. We don't understand intelligence. On the other side, we don't understand consciousness. They are two sides of exactly the same coin. And we don't understand the comprehensibility of consciousness. In fact, we've got so many models, we don't know which model is true. The reason for saying this is when you get one human, you can try and put models around that human, which scale to a few other people, which is how we do, behavioral science. But when you get humans to interact, effectively, as I use as a word, which is consurgence, which is not an emergent property. Consurgence is where you actually do get properties that come from the interactions of people. What happens is you end up with things that are different. It's that piece. It's the comprehension of what's occurred because you put lots of people in the same room, which I think is the other side of just explaining the individual who happens to be in the room. These are the bits. We've just got to make sure we don't get obsessed with one thing and miss the other side of the same coin. And the problem is we're dealing now with complex systems, kind of like what we said earlier on. And trying to make complex systems explainable means that we tend to build models which are overly simplistic. And we don't look at the assumptions of our simplistic model to try and explain something or trying to comprehend something. And this is where it's very easy to avoid these things, but that's this point where we start to see the unintended consequences. And it's not that I want to stop, and it's not that we should stop, but we should get other people to spend time to think about the unintended, which is how we deal with uncertainty.
And I think we have a lot of other industries, and even the science is dealing kind of with the similar problems, because we have physics and we have math. The math is trying to explain the real world, but actually it's way behind the science and physics, because we have so many things which are working, but we cannot explain why. And we sometimes even don't have the proper math engine for doing that, like electromagnetic effects and the electricity. It works. We're using it for centuries, but no one has a proper clue how exactly it works. Way it changes. And so many examples. So actually it's a really good takeaway, because sometimes by not understanding or going into the bits and pieces exactly to explain every step how we got the results, it doesn't mean that we are not controlling, and the result is not the one that we want to get. So basically, finding the cat on the picture is still finding the cat, even though we don't understand how exactly the pattern was on this particular image that AI model said, yeah, it's a black cat. So that's a good takeaway. Since we're approaching till the end of the episode, I'm usually starting to ask this question, because we have so diverse topics, and AI, data governments, fintechs, and banks. It's so deep. So maybe there is a question that I didn't ask you today and you would like to answer to our audience.
One of the ones I use as an example, which I love. So let's go back to nature. Bumblebees, the humble little bumblebee, which is obviously only ever 40 minutes away from death. Now, everybody knows the bumblebee. Everybody knows the waggle dance, the figure of 8 dance that all the bees do. So what happens is a bee finds some food on some pollen. It goes back to the hive. It does the waggle dance so the other bees can go off and find the food. Happy days. Everyone stops at that assumption. Apart from, at any one time when a bee comes back and does the waggle dance, 80% of the bees hear the waggle dance, will go off and find the flower, which brings back either the water or the food, which then allows the hive to thrive. The 20% of the bees actually, and it's random, it's not that every bee does it every single time, it's a completely random process. 20% of the bees completely ignore it. And they go off where there is no food. Basically, they then face death. And they risk everything to find new food. Because if you only ever go to the same resource, you will eventually die, because you've run out of food at that resource. So 20% of the bees continually go out and find new resources. Some of them die in the process of doing it, but that's how the hive thrives, because every time some of them completely ignore what's happening and go off and do something completely new. And I think this is, and it's not about Petro's 80-20, which I really dislike, because actually that's not what he said. It just happens to be an 80-20, and it's not a rule. It just happens to be that particular way. So let's not get obsessed with that piece. But the principle is that in your organization, 80% of your people should be doing the same. They should be following the waggle dance. They should be doing this. They should be doing 20% of the people should be absolutely breaking the rules. We need to find a better way inside our organizations to do that around AI, rather than just accepting it, 20% go and break it. How we both thrive by repeating stuff, repeating the waggle dance, listening to what's happening, going and getting our food and supporting the system, and 20% of basically trying to make sure that there is a future by bringing in new food and water. But the reality is they've got to risk everything to go and do it. And I don't think we've got that balance right in organizations, if I'm truth, particularly around AI. We've got too many people effectively following the waggle dance and not wanting to break the systems. The systems are going to get broken if we like them or not, and yet we lack the leadership and decision-making in uncertain times to be able to go and do that. So kind of like I'd say, let's find the 20% who want to go and break the rules. A bit like you, Igor.
That's really, really well put, and I really like it. It reminds me of the principle of redundancy, because if you don't have the redundancy, even if it feels a little bit weird, like everyone is doing it and it works, and you don't have this additional resource, in crisis moment, you will break, because that's what actually makes a lot of processes thriving and possible to survive crises or be more effective, because we have this additional space to do things. And the good example is space programs. Like, every piece of the components space program is built with the redundancy, because you actually can calculate everything, but the reality is much, much harder. And thank you so much for this lovely discussion. It was really interesting one. Thank you once again for finding the time to come to us. And please sign to our podcast. Please ask us the questions. I think that's one of the best episodes that we recently done. So thank you, Tony, so much.
Thank you. Thank you, Igor. Speak to you very soon.